I did a video exposing this guy, and it's kind of interesting because this guy, like, he wants to try to get people to not own their own keys and own their own Bitcoin, and to go through like a subsidiary that's controlled and governed, and you shouldn't do that. It's the only thing I disagree with him on. Everything else, he's very intelligent in the manner of speaking about Bitcoin and stuff, and so therefore partially should take what he's saying as needed critical information to what's going on with Bitcoin, right?
18% a year for the past 5 years. Bitcoin's up 62%. Microsoft is outperforming the S&P by 4% a year. Bitcoin is outperforming by 48% a year. Buying Bitcoin would be 10x better. You're going to destroy 97% of your capital buying the stock of MSFT versus buying the Bitcoin. And Bitcoin is the highest performing uncorrelated asset, so you're going to hold something on your balance sheet that's not correlated to everything else.
Bitcoin is now the highest performing uncorrelated asset on the planet.
Think of that. So in 15 years, all the Bitcoin that will be mined ever will have practically been mined, and then the last little bit will take 100 years to mine, right? So we're slowly approaching that moment where there is going to be no more Bitcoin ever created, like predominantly, because it's going to get so small. Like every year there's going to be like 1.5 Bitcoin a year created or something. You see what I'm saying? At a certain point, right, it's going to be very small and get smaller and smaller and smaller. Right? So 99% of the people on the earth don't even use Bitcoin or know anything about Bitcoin or are not invested in Bitcoin. Like the whole Europe nation is declaring they don't want nothing to do with Bitcoin, yet it's the best asset, period, to be investing in right now.
Holding it sets you up for wealth that extends far beyond your lifetime. That's the message from Strategy's executive chairman, Michael Saylor. Most people still store their money in assets exposed to fires, wars, legal restrictions, and political seizure. Real estate can be taxed or taken, bonds can be devalued, corporate stocks can fall under antitrust scrutiny, or cultural collapse. But Bitcoin sidesteps all of it by existing in a digital realm where borders, governments, and policies hold no power. It's portable, incorruptible, and always accessible. This is what makes Bitcoin more than just an asset. It's a shelter from the decay that surrounds everything else. Make sure to stick around until the end of the video as Michael Saylor breaks down why Bitcoin is rapidly becoming the safest, strongest, and most generational form of wealth the world has ever seen.
You don't want to miss the next wave. Digital capital is the next wave. It's the most global, interesting asset in the world. Hundreds of millions of people are talking about it. The greatest digital transformation of the 21st century is the transformation of capital. You're supposed to be in the digital transformation business. This is the transformation of capital, right? Global wealth is spread across $900 trillion of assets. Bitcoin is $2 trillion. Most capital is divided between long-term capital. That's the store of value assets you just hold to keep your money. And then other assets held for utility. The stuff, the building you need to work in, the warehouse, the working farm, the stock you're holding for dividends. When you see the world that way, what you realize is that risk factors are destroying the long-term capital, right?
Dang, that's crazy, bro. Look at that. Risk factors destroys $10 trillion in capital per year. Regulation, taxation, competition, obsolescence, economic and political chaos, and criminal dilute capital. General taxes, property taxes, capital gains, income tax, VAT, sales, price control, transfers, accident, insurance, regulation, competition, currency, recession, exportation, I totally butchered that word, expropriation, war and crime, politics, tenants, discrimination, weather, catastrophe, obsolescence, incompetence, torts, energy, storage, traffic, culture shock. That's crazy, bro. Like, you gotta think, like, tax on tax. See that 3 taxes on your shit. Like, aren't we supposed to be the place that's like, we shouldn't be paying any taxes for anything, because that's the whole reason why we fought Britain.
Capital is being destroyed by taxes, by inflation, by tariffs, by insurance, by torts, culture shocks, regulation. antitrust. Every single 10K has got 30 pages of these disclosures in them. And so that long-term capital, it's transforming into digital capital because there's no fires in cyberspace. There's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no war in cyberspace. Why don't you just move your money someplace where some politician is not going to take it away from you, or some war isn't going to deprive you of it, or lightning's not going to strike it? Because at the end of the day, Bitcoin succeeds based on a simple premise. A bunch of smart people in the world would like to keep their money. Period. That's the idea.
Right.
Right? Who's buying it? The smart money. The smart money everywhere in the world is buying a digital network to keep their money. That's the idea. Digital capital is, it's better.
Hold on, what is
That's the
it? Digital capital is economically and technically superior. Bitcoin offers the benefits of owning a building without the liabilities of conspicuous immobile asset. No tax, no traffic, no tenants, no torts, no trouble, no mayor, no weather, no corrosion, no regulator. Invisible, indestructible, immortal, teleportable, programmable, divisible, volatile, fungible, configurable.
Idea. Digital capital is, it's better. A digital building is better than a physical building. Everything you hate about the building, that it's visible and the mayor can rent control it and weather can strike it, everything you hate about it goes away. And instead, the building becomes invisible, indestructible, immortal, and teleportable. Everything that makes it better, you add in. Everything you don't like, it goes away. Bitcoin is the immortal asset. It's the asset that lasts 1,000.
Like, think of it this way. Hackers can get everything on my computer but my Bitcoin. Do you see what I'm saying? Like, anything, like, I can get my name, my social security, They're not going to be able to get my Bitcoin. Especially once I move it to a cold storage, which I'm going to work on doing in the next year.
1,000 years. You want to keep your money 10 years? You want to keep your money 3 years? You buy a crappy currency. You want to keep it 10 years? Buy a strong currency. You want to keep it 50 years? Buy some kind of company or equity and worry about it for 50 years, or buy some property. What if you want to keep your money 500 years? How do you do that? You can't do it with any conventional asset. You can do it with Bitcoin. Bitcoin is the longest lived capital asset in the history of the world.
Why make the switch to Lightspeed in 2025? Listen to what real
I swear it
customers
did a
have to say.
commercial because I fucking was doing a
How
dab.
many people want to be rich forever? I mean, why wouldn't you want to be rich forever? Bitcoin represents economic immortality. It represents the quest to make my company live not a decade. The average life expectancy of a company, by the way, is like 10 to 15 years. If your kids died at age 12, right, you don't think that's a health problem? So what if I told you the reason your kids die at age 12 is they drink dirty water? And I said the solution is drink clean water and they'll live to age 90. Would you change? Right? The money is the money is the fluid. It is, you're running on toxic capital and you want to live forever. You need clean money. So what do we see? We see an industry that's growing from 2 trillion to 200 trillion. When Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold.
That's crazy right there. Look at that chart, bro. Bitcoin versus gold over 14 and a half years, which is almost basically the whole inception of Bitcoin, right? Crazy, bro. Let's see. Hold on. The gold line is $1 invested in Bitcoin. The red line or orange line, if you see it that way, is Bitcoin per ounce of gold. That's crazy, bro. And then the dotted line at the bottom is $1 invested in gold. And notice how it's just stayed at the bottom. It's a crazy ass chart right there, bro. Like, I ain't gonna lie.
maybe 100 times better than gold. And it is the most powerful, secure computer network in the world.
Like, yeah, you see what I'm saying? Like, it's logistically super secure.
It's fitting and
Like, you have more of a chance of losing your own Bitcoin because you lost your password or keys than someone stealing it from you.
the 21st century, if you want to create a digital commodity, you put it on a computer network, you protect it with electricity, you protect it with computer power, and you spread it to everybody everywhere on Earth. That's what Bitcoin is. It is digital capital.
Michael Saylor calls Bitcoin the emerging global monetary asset, and he believes it's on track to grow from a $2 trillion network into a $200 trillion powerhouse.
Now, imagine, okay, so let's do some math. Hold on. Here, let's go to ChatGPT for this. Okay, and then let's see. Think deeper for this one. And then so it's like, if Bitcoin is currently at 2 trillion market cap and is at 100,000 $100,000, how much would one Bitcoin be at a 200 trillion market cap? You see that fucking number, bro? Look. So if in the next, let's see, we have to go back. So 10 million. So that, remember this number. Remember this number.
Even then, it would remain smaller than real estate, equity.
It'd be smaller than all this shit right here. And you seen the number. You see the number. So if it goes from a 2 trillion to 200 trillion, it'll go from 100,000 and 10 times itself twice. From 100,000 to 10 million. And so think about it. If it goes from 200 trillion to 500 trillion market cap. Well, shit, let's just do that. Let's just go back. I don't know why I didn't. I should have just left it on here. Dang it, it forces me to do this now. No. Here, go back here. Okay. What would it be if it is 500 trillion market cap? $25. Do you see what I'm saying? Look at that. $25 million for one Bitcoin if the market cap goes to 500 trillion.
And bonds, but its impact will be undeniable. It's not just digital gold. It's faster, more secure, and vastly more efficient. Running on
Let me just make sure the math is. How much is 1% of 10 million? Right. So if you have 1% of a Bitcoin when it reaches $10 million, you will have $100,000. Comprehend? Then you take this. There's ways now. You can take this $100,000 and leverage it to borrow, say, $20,000. You use that to do things. Do you see what I'm saying? Wait a second. What are you asking, Mike? So how much, like 500 a month would make in 1 year? What do you mean? Like investing 500 a month? Here, like, oh, let me see. So, right. So look, so like I've done a lot of research, as you can see, right? So, right. So see, look. Okay, right. So look, see right here? And see how it says to accumulate one Bitcoin over 15 years with a consistent 70% growth rate. Now look, the actual speculative. So you got to think I'm doing things to make sure I get a clarity, right? Different angles, right? So the speculative growth rate for Bitcoin over the next 15 years is said to be around 29%, right? So I'm doing this question based off of 70% annual growth rate, right? And starting with approximately 0.0003 Bitcoin, right? So do you think about those numbers, right? I already have more Bitcoin than this already. Do you see what I'm saying? But think of these numbers, right? So to accumulate one Bitcoin over 15 years with a 70% growth rate is $37 a month. So by investing approximately $37 today and assuming steady 70% annual growth, you would accumulate one Bitcoin in 15 years. So do you see what I mean? Does the math make sense? Like, and I have other different ones. You see what I'm saying? But you see what I'm saying? Look, by investing approximately this much Bitcoin today and assuming steady growth, you would accumulate one Bitcoin in 8 years. All right, let's do that. How many years would it take to get to one Bitcoin if you invested $500 a month and started with no Bitcoin? To figure this out with annual grade, so assume like see look 29%, 30%, 50%, etc. Would you like me to convert your monthly dollar contribution to Bitcoin at today's price or assume continuous bit growth? Assume continuous Bitcoin growth. Assume continuous Bitcoin growth. Okay, so see 29%. See it. With a Bitcoin annual grade 29, 500 months starting at 60K would per Bitcoin. You'd reach one Bitcoin if it was at 60. What the fuck, bro? Why would you do that? Can you base? I don't know why I did that. It still does weird shit sometimes. Can you base it off the latest Bitcoin data? I don't know why it chose 60,000. It chose just an arbitrary number. You see what I'm saying? So I needed to actually look it up. All right, here we go. With realistic growth, 500 Bitcoin, it would take you 7.4 years, bro. So if you invested $500 a month for 7.4 years with a realistic 29% growth rate, it would take you 7 years. If Bitcoin somehow sustains a phenomenal 70% growth, you'd reach it in 4.7 years. Do you see what I mean? By investing 300, so for this one, it was $371.42 each month with 30% annual growth, and it would take 8 years. Do you see what I'm saying? And so this was that 30% annual growth, and this is where I go 70% annual growth. And then see, it says it would take you'd have to pay $1,492 a month to get to Bitcoin in 8 years. So do you see how, like, if you want to, like, if there's a higher annual growth, right, you have to pay more money to get there quicker. Do you see what I'm saying? Versus if it stays at a lower consistency rate, like 30%, see how you don't have to invest that much. And because everyone in the world is already speculating that growth is only going to be around, it's going to start going to be around an annual growth of 30%. You can easily invest starting with little to no Bitcoin and invest, like you said, $500, and you're going to be able to get to Bitcoin relatively, like one Bitcoin relatively quickly. You see what I'm saying? And then obviously you're going to have to adjust for any potential like fluctuations or milestones. Like if like 1 year in particular happens to be like 70, 80%, you might have to invest more money in that year potentially to keep up the same pace. But even if you kept the same pace, that one fluctuation is going to stop you from getting to a Bitcoin. Do you see what I'm saying? And I'm saying, like, you only have until 2040. By the time 2040 rolls around, you have 15 years, basically, is what I'm saying, like, to get to a Bitcoin. Like, after it gets to once 2040 happens, let's just say right now, 99% of the world won't get a Bitcoin. Yet, you can still be part of the 1% that gets a Bitcoin. Do you see what I'm saying? Which is what I'm working on, right? And I'm only investing in like $50 to $60 to $75 a week. You see what I'm saying? So I'm not even doing this, but I think I broke it down for 15 years and it came out to like $37, right? And that was with a consistent growth rate of 70%, right? Every year. And you could still get to a Bitcoin in 15 years. Do you see what I'm saying? So, like, if you start now, you will definitely and stay consistent until like for the next 10, 15 years. Do you see what I'm saying? Of just investing Bitcoin, you will get to a Bitcoin. But this is like the last chance, bro. I did the numbers, bro. I did the numbers. I've done a lot of calculations with chat, like GPT, right? And like based on all numbers I've been able to calculate, if you don't start now consistently investing in Bitcoin for the next 10 to 15 years, every week or month, a certain number every month or week, but see, then the great thing is guess what? You don't even need a Bitcoin. You don't even need one Bitcoin. If you get to 10% of a Bitcoin in the next 10 years, you're still going to be great. You're still going to be good. You see what I'm saying? Because at some point, Bitcoin's going to get to a point where your 10% is still worth millions upon millions of dollars.
On the most powerful computer network on Earth, Bitcoin is defended by electricity, secured through math, and accessible to anyone, anywhere. Saylor believes that just as Kodak couldn't survive the rise...
You see this? Look, this is at people's address. Look, $7,000 USA, 6,000, 4,000 pounds, pending, approved. Like, look at this, bro. Boom, 10, 20, 19, 2019, 2018, 2020. Sandy, but Jack, Bobby. Like, look, it's you know what I'm saying? Oh, I don't know why I scrolled down. I'm like, oh, that's funny. I'm pretty high now, bro. I scrolled down like I could scroll down on this thing. Anyways, let's
Is in
go.
digital photography, legacy finance won't withstand the shift to digital capital.
Microsoft should be powered by digital capital. And Bitcoin is the highest performing uncorrelated asset. So you're going to hold something on your balance sheet that's not correlated to everything else. So let's look at the charts. Microsoft is up 18% a year for the past 5 years. Bitcoin's up 62%.
See what I mean? For the last 5 years, Bitcoin is up 62% annually a year. But see, as the Bitcoin slows in being able to be made, that's going to drop. Do you see what I'm saying? And that's why they say that the number's going to go down or be around 30 to 50%. Do you see what I'm saying?
What's the cost of capital? The cost of capital is the S&P 500. It's 14%. That's what you're judged against.
So which would you rather invest in? The S&P 500 that's in the last 5 years only retained 14%. Microsoft individually has done 18%, and the Magnificent Seven has done 28%.
Are bonds doing? They're down 5%. Now, what if I normalize this against the cost of capital? So what you can see is if S&P 500 is the baseline, Microsoft is outperforming the S&P by 4% a year. Bitcoin is outperforming by 48% a year. And bonds are underperforming by 19% a year.
And that's crazy. Look at that. Gold is down 8% compared to the S&P 500 over the last 5 years.
So Bitcoin is outperforming, Microsoft is going to do a buyback. Buying Bitcoin would be 10x better than buying your own stock. If Microsoft buys bonds, you're destroying 99.7% of your capital over 10 years.
That's crazy numbers, bro. Like, so don't buy bonds, bro, for anything. Don't buy bonds for anything, bro.
Right? That's the problem. Bonds are toxic, but buying your own stock destroys 97% of your capital. So you're going to destroy 97% of your capital buying the stock of MSFT versus buying the Bitcoin. And if you want to outperform, you want to reverse the transaction. You put Bitcoin on the balance sheet. What's the secondary impact of capitalizing on bonds? Because that's what Microsoft does. It decapitalizes, it gets rid of all of its cash flow, and it uses bonds for short-term as its primary treasury asset. So the result is you reduce your options open interest by 98%.
Hold on, let me try to figure out this chart. MSFT liquidity and options are anemic and deteriorating. Microsoft is destroying its options market and crippling its equity as a store value with this treasury. Okay, so I think he runs MicroStrategy, right? The guy that's talking. And they have the most Bitcoin out of any company. They have like 500,000 Bitcoin or something. Over 500,000 Bitcoin, right? So super a lot of money, bro. 500, like it's a lot. 500,000 Bitcoin is 500 million or 5 million, excuse me.
Percent. Compare the open interest in MSTR, the interest in Microsoft. 98% less. You reduce the liquidity in your stock by 99%. What they're doing is they're denurturing the company, right? But you're not realizing it. Who's losing? The people holding the equity are losing because the equity becomes much weaker collateral. If it's not volatile, then it's not as valuable to hold. And if it's not liquid, then it's not as good collateral to hold. And Bitcoin, of course, emerged as the alternative to bonds in 2024. That was the point at which the SEC endorsed the Bitcoin ETFs. That's the point at which you could see FASB fair value accounting was coming. That was kind of year 0. We're now in year 1. There's three, if you define money as a liquid fungible asset, there's 3 monies that you can use to capitalize a company in this world today. There is treasury bills, sovereign debt that is, but generally short-dated treasury bills. There's gold, and there's Bitcoin. You've got 19th century money in gold. That was the best idea in the 19th century, gold. You've got 20th century money in treasuries and sovereign debt, and Bitcoin represents 21st century money. Liquid, fungible, capital asset, alternative to bonds. And so you have a choice to make at Microsoft. You can cling to the past, which is conventional finance strategies. Use treasury bonds, do stock buybacks, dividend out your cash flow, or you can embrace the future. You can take innovative.
Yeah, see, like, this is why I say, like, even with all this crazy stuff that's about to happen in the world, right? Like, the truth I speak is on the other side of all this other crazy stuff, because it's like everyone was born into it. Think of it like you were born into something and you signed a contract that you didn't know you were signing, right? So you agreed to have certain things happen to you that you didn't know you were going to have happen to you. And you didn't know you agreed to it. And one of those things is this whole digital takeover thing and apparatus where everything is going, like, that's already has to happen to get to what I'm talking about. Do you see what I mean? Because the more everyone becomes financially free, the more everyone has the ability to seek truth, because what else is there to do?
Financial strategies based on Bitcoin as a digital capital asset. The first choice is a regression. You're divesting yourself of $100 billion a year. You're increasing investor risk and you're slowing your own growth rate. The second choice is a progression. You're investing $100 billion a year in your enterprise. You're decreasing the risk. You're accelerating the growth. If you look over the last 5 years, Microsoft surrendered $200 billion of capital. They literally won it. How many companies on earth ever generated $200 billion in after-tax cash flow? Right? It's like, it's got to be one of the 10 greatest achievements ever. They won, and they snatched defeat from the jaws of victory. They took the money, and what did they do with it? Give it away. What are we really doing? Well, we're dividending it out. That's one way to get away, and we'll buy our stock back. That's another way to give it away. What happens when you do that?
Crazy,
you
bro.
amplify the risk factors in your own prospectus for your own shareholders.
That's a lot, bro. That's a lot of shit that's happening. My bad. I comprehend economics, but I don't comprehend economics expertly. So it's like crazy, bro. Global economic conditions, talent acquisition and retention, hardware manufacturing, natural disasters and catastrophic events, technological changes, third-party service providers, data privacy, reputation management. Yeah, that's a lot, bro.
Now facing all these are actual risks that Microsoft publishes to the world. These are the risks that the world's greatest company takes. Every investor has to assume these risks if they want to use Microsoft stock as a long-term store of value. What Microsoft did was they made sure they had $200 billion less capital to deal with the risks. And they probably decreased their enterprise value dramatically. So you're actually levering the company on the future risk. How do you escape the vicious cycle? When you get that much risk, you know what you do? You put massive pressure on your employees. Then you put massive pressure on your customers. Then you force your customers to buy products for 3 years when they only want 1 year. You force them to buy everything when they only want some things. And you lever your competitors. They complain to the regulators and the politicians. You get sued. Everybody gets angry. Then you go and you engage in the political process. It's a very divisive, stressful dynamic.
Which is insane and by design.
And if you were to sit in the boardroom of Microsoft and say, well, why do you have to force everyone to sign a 3-year contract or whatever, the answer is because we get a lot of risk. We're trying to strip the volatility off of the earnings forecast for 12 months from now. Well, Bitcoin is the asset without that counterparty risk. You want to get away from counterparty risk to competitors, countries, corporations, creditors, currencies, or cultures. You got to find something that's not exposed to any of them. And that's Bitcoin. So If you could buy a $100 billion company growing 60% a year at 1x revenue, and if it was more profitable than your own company, would you do it?
That's crazy numbers right there. What if you could buy $100 million company growing at 60% per year times one revenue versus any other company in the world? Like, that's Bitcoin. And it's not a company, it's you own it. You own the Bitcoin. Well, like, think of it, the only way you fully own the Bitcoin is in cold storage, right? So that's how you fully own the Bitcoin, right? Like, hands down, no one can touch it, no one can get to it. It's not even on the internet to be taken. You see what I'm saying?
Of course you would.
So there's Michael Saylor with a powerful reminder of where money is actually multiplying. Microsoft may have the scale and influence to lead the digital era, but its financial strategy is anchored to outdated habits. Meanwhile, Bitcoin is posting yearly returns more than 3 times higher than Microsoft stock and leaving bonds in the dust. As Microsoft keeps deploying billions into stock buybacks and low-yield debt, Bitcoin is proving to be the smarter, faster-growing asset. It avoids the drag of inflation, regulatory pressure, and political risk. At this point, the message is hard to ignore. Bitcoin isn't just a hedge, it's a better foundation for anyone looking to protect wealth and build lasting value. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin
I
world,
suggest you
subscribe to my
subscribe to
daily
him.
5-minute crypto newsletter.
And
It's
I
a
need to do
concise
this too.
resource
I
for
need
the
to get
latest
this.
expert
I need to
predictions,
sign up for
breaking
this.
news, and top on-chain analysis.
It would be very
trusted
helpful.
by over 50,000 subscribers for
Anyways,
insightful
like
crypto
and subscribe
investment
to me,
information.
like, subscribe him,
Don't
and
miss
I'm
out
out.
on the